Hello and welcome to this edition of Closing Trades right here on ET Now. And it's finally picked up after a very, very quiet and flat first half for the index. We're pretty much at the high point of the day. Over a 100-point move is what you're seeing, led by names like Kotak Bank, which has got a strong thumbs up from the market after its numbers. There's Wipro as well going strong, a good 7.25% of a move, both these being earnings reactions. Look at a Bajaj Finance, 3.25% uptick. And this stock, to be fair, began moving post that Monday manic or crash last week, and from there it's seen a very, very consistent move up. It's now on its way to perhaps 7,500 on the stock. Reliance, after that big move on Friday, that's fallen a little bit flat, so it's very, very tempered and quiet as of now. There's SBI, BEL, they are all supporting the index today. Along with that, of course, HDFC Bank as well. Not quite the case with the Trent, not quite the case with an SBI Life, TCS, M&M. These are some of the blue chips which continue their downtick, so to speak. This Kalyan Jewellers, after many days, it's finally seeing a meaningful comeback, about 6.25% higher, and we'll tell you the reasons why. And then UBL and Idea as well, Cheryl, which are holding up quite smartly. Of course, news triggers behind both.
Absolutely, Aisha. Both of these counters are buzzing on back of a news piece. Remember on Jan 8th, when you had United Breweries saying that they're going to stop the sale of beer supply to Telangana government, and right now they've said that they're going ahead and they're resuming the beer supply to TGBCL with immediate effect. And post that, immediately you saw a reaction on the stock price as well. It saw a sharp jump and it's maintaining that pole position in trade today. Apart from that, you have Vodafone Idea that is in focus in today's trading session on a news article talking about the AGR dues, where the government is likely to partially waive off those dues. So on back of that, you have Vodafone Idea that is perked up in trade. Along with that, take a look at what Indus Towers is doing, because most of the problems coming in for Indus Towers would be also on back of the fact that you have a lot of dues waiting from Vodafone Idea. So you have Indus Towers also that is in move in today's trading session. Apart from that, a couple of counters that are reacting to their numbers. Take a look at Paytm. Paytm did see a sharp dip right after they announced their numbers. From there on, the Paytm stock price actually saw an uptick on back of the fact that the loss was much less than what the street was anticipating. Right now, the stock is cooled off a tad bit, but still holding on to the positive territory. Take a look at IOB as well as Karur Vysya Bank. Both of them have come out with their earnings a short while ago. Along with that, you have also IRFC that's come out with their earnings. So that one also reacting to their earnings. So a lot of stock-specific news to watch out for in trade today, definitely. Along with that, you have the sugar pack also that's pretty perked up in trade today. EID Parry, Balram Puccini, Sri Renuka. Check all of these counters on back of the fact that reports are suggesting that government may go ahead and remove the ban on the exports, and on back of that, all of these counters are reacting to the news, Aisha. So a lot of counters reacting to news flow, not just earnings today.
Yeah, not just that, but the big fillip within the large caps at least is very, very earnings driven. Before we take it across to our chartists, let's get you an exclusive. And we've learned from our sources that the government may actually announce measures for affordable housing in the upcoming budget. Prakash, my colleague, is here with more details on what he's picking up from his sources.
Yes, we are learning from our sources that the government is likely to make some significant announcement for the housing sector in the upcoming budget. We're given to understand that several suggestions and recommendations have been made by the Housing Ministry and industry, where some of these recommendations could be part of the upcoming budget. Sources are indicating that the government is likely to widen the scope on a new housing scheme where beneficiaries could get benefit of interest subsidy on the loan amount beyond rupees 25 lakh. A very significant development coming in, where these announcements are likely to be made in order to provide impetus to the housing sector, especially under affordable category. Along with that, the sources are also indicating that the government is likely to make higher allocation for PM Awas Yojana Rural and PM Awas Yojana Urban, where 20% higher allocation in the overall budget for the sector could be announced. Along with that, Housing Ministry has also made a representation when it comes to compliance-related burden, and some relaxation is also expected in the upcoming budget. Along with that, industry has made several recommendations to the government, especially considering the fact that the sales of houses primarily coming under affordable segment has come down to 18% in 2024, and therefore several recommendations have been made by the industry and the Housing Ministry as well. We are expecting some big announcement in the budget.
Okay, that's affordable housing, and we are expecting some SOPs for the particular segment in the upcoming budget, is what the ET Now cover is on the budget. But let's try and map what the technical setup for today is looking like. And Kunal, after that quiet start, we finally picked up in trade. But what's that telling you about the Nifty structure?
I think it's a good day for the markets overall. So yes, we started off on a much quieter note, but I think we've picked up pace, quite strongly on the few indices. So for example, Bank Nifty has done remarkably well today, up I think at one point on almost around 1,000 points, cooled off from there to just around that 850, 870 points where it's trading right now on the positive side. But I think it's been a phenomenal comeback. What we've seen for both the Nifty and the Bank Nifty is that the tendency of the indices hitting the previous lows or making a fresh swing low, breaking below the previous day swing charts, I think that's not seen today. In fact, today what we've seen is that Nifty and Bank Nifty both have made a higher low for themselves with respect to the Friday's candlestick, and we've managed to break past about the highs made over the last 2 or 3 trading sessions. That overall pattern I think is very positive for the index. So even if we close at current levels, say by a margin of 800, 850 points on the Bank Nifty and 150 points thereabouts for the Nifty, that could generally indicate a lot of positivity going into the next couple of days, especially into the next week of expiry.
All right, so that's the take coming in on the markets and Nifty Bank in particular. We also have Alistair Newton joining us to talk about the big event that is all set to take place this evening, and to talk about the impact of that, especially when you talk about the world order. Thank you so much, Alistair. Thank you so much for joining us on ET Now to talk about the big event that is the Trump taking oath as president of the United States once again. And this time, the entire scenario is different when you compare it to the Trump regime 1.0. The rhetoric definitely is similar.
Yes, except it's much more forceful, much clearer, and much more determined to crack on with a very rapid rollout of the MAGA agenda. And I think we should be in no doubt whatsoever that President Trump, as he will be in a few hours' time, is determined to make the most of the next 2 years, knowing very well that, things happen in midterm elections, and effectively, as a journal which I won't mention by name because I'd be advertising, headlined today in one of its articles, this is actually the beginning of the end of the Trump era, assuming that he doesn't manage to finagle some way to serve for a 3rd term, which he says he's not going to do. So he is, effectively, we start the countdown today, and Donald Trump will be in a hurry to impose his agenda on America, and let's be clear about this, to secure his legacy.
Yeah, absolutely. Alistair, hi. Good to have you on the show. I think everyone's waiting with bated breath as to what the rhetoric on China is going to be, and whether or not trade war with China, do we see that panning out under Trump? You think tensions will abate or escalate?
Well, of course, a lot of people see Trump as being the quintessential deal maker, and there is no question other than he likes doing deals. However, if we look at his history dating back 40 years, he has long been very, very negative indeed about America's trade deficit. He has long advocated tariffs as a means of addressing the deficit, and more recently has cited tariffs as the means to address what he sees as a lot of additional ills: illegal immigration, the issue with drugs in America, and so on and so forth. So I do think that of all the uncertainties that surround Donald Trump, the one thing on which he has been extraordinarily consistent is tarification of imports into the US. Now, I'm not suggesting that we have to take him literally at his words, i.e. 60% tariffs on China, since you cited China, 10 to 20% on all other imports. But I do think we should expect some fairly rapid moves on tariffs, because contrary to what a lot of the commentariats are expecting, I think what we are likely to see from Donald Trump is tariffs first, talk later, rather than using the threat of tariffs to bring people to the table. Impose the tariffs first, ratchet them back in return for concessions. And China clearly is going to be his top target. Now, whether Elon Musk, who clearly has a big vested interest in good relations with China, given that over half of Tesla motor cars are manufactured there, whether Elon Musk can get some softening of Trump's stance remains to be seen. Let's keep in mind that Musk has basically to push back against the whole of the rest of the Trump administration if we're going to see anything other than real hawkishness on China going forward.
Right. That's one key criteria or an event that you need to watch out for, key development that you need to watch out for, the role that Elon Musk also will play if it is in softening Trump's stance when you talk about China. But I wanted to understand, given your experience in this geopolitical risk analysis, what are the primary concerns or flashpoints that investors or businesses should keep in mind when they are actually trying to analyze or gauge the entire Trump 2.0 administration?
Well, obviously, I think tariffs is the biggest single grey rhino out there. And I do think that Wall Street is being remarkably blasé about the tariff threats, especially bearing in mind two factors which markets do not seem to be taking into account. First of all, assuming that Trump does go ahead with some tariffication of imports from China, and why wouldn't he? After all, Biden did nothing to roll back the Trump 2018 tariffs. China will retaliate. There is no question about that whatsoever. We've already seen China moving on strategic minerals in response to more tech embargoes imposed by the Biden administration in the last few weeks of its term in office. So China will retaliate. I don't think markets are taking account of that. And I also don't think markets are taking sufficient account of the likely widening of trade wars as China looks to continue its export-led growth model by looking for markets to substitute, not only for the United States, but also increasingly for the European Union. And if we look at emerging markets, including, I might say, India, you're seeing the rollout of more and more defensive trade measures against alleged unfair imports from China. So I think markets need to wake up to the fact that we are looking at something which is much, much bigger potentially than just in inverted commas, Donald Trump imposing a few tariffs on imports from third countries, most notably China. Secondly, I think we do need to look out for moves on immigration. I think probably we're perhaps a little bit too concerned about that. I think we're going to see a lot of noise. But I do think it's going to be very difficult for Donald Trump to arrange mass deportations. And I do think that he is going to succumb to pressure from the tech sector titans in particular over H-1B visas, which of course is an issue of particular interest to you guys in India.
Yeah, absolutely. The other thing, Alistair, that I wanted to, talk about was Trump's impact on geopolitics, because he's been pretty vocal all through the past 2 days talking about how he's going to try and solve the Russia-Ukraine situation and completely evade a World War III.
Well, I think talk of World War III is actually a bit overstated. So let's put that to one side. On Russia-Ukraine, he has ratcheted back a bit from bringing peace on day one, which clearly was never going to happen. He's now talking about maybe 6 months or even longer. He almost certainly will succeed in getting the parties to the table. Getting a deal, in theory, would be quite easy if he was prepared basically to throw Ukraine under a bus. But the disadvantage of doing that would be that it would be perceived by the likes of China and Iran as being a sign of weakness on his behalf. North Korea too, let's not forget North Korea. Since Trump needs to be doing deals with China, is looking to do a deal with Iran of some sort after exerting maximum pressure on Iran. And we've already seen him playing a hand in the Middle East conflict. So clearly he is focused on that. He can't afford to be seen to surrender to whatever Vladimir Putin puts on the table in the first instance. So I do think Russia-Ukraine is going to take time. I do think Donald Trump deserves some credit for the Gaza deal, which we saw yesterday, beginning to roll out. Let's hope it holds for the sake of everybody in the region, not just the Palestinians in Gaza. And I certainly think we're going to see rising tensions with China. Where Trump stands on Taiwan, who knows? He's not said anything about that as yet. It is interesting, though, that according to reports, the Quad ambassadors are going to meet with Donald Trump over the course of the next couple of days. That's Japan, Australia, and India, plus the US, the Quad. And that does seem to indicate that he's not simply going to abandon allies over key geopolitical issues as seen from the White House.
Right, so there's lots for us to watch out for. Alistair, thank you so much for joining us in ET Now to give us your take on what the Trump 2.0 administration could be likely or look like. And yes, definitely Trump, or rather tariffs, is something that we all need to watch out for very closely. But the 55th edition of the annual World Economic Forum is all set to begin here at Davos, Switzerland. More than 3,000 leaders from across the geographies and industries are convening for this meeting to discuss important regional and global issues. With the theme of this year's edition set to be collaboration for the intelligent age, the forum will touch on topics such as managing a fair and equitable energy transition, boosting growth to raise living standards, as well as reacting to geopolitical shocks. The venue here is full of bustle and energy as it gears up to host more than 350 government leaders, over 1,600 business leaders, and more than 170 leaders from civil society and social sector. Amongst these names is India, from which 6 states, namely Andhra Pradesh, Uttar Pradesh, Kerala, Maharashtra, Telangana, and Tamil Nadu, are showcasing their regional success stories and investment potential all under one roof in the India Pavilion. Stay tuned to Times Network. We will be bringing you more interesting insights and glimpses from the World Economic Forum 2025. Welcome back. You're watching Closing Trades right here on ET Now. If you look at the markets near the day's highest point at this point in time, but let's take a look at Nazara Tech, because that particular counter is in focus in today's trading session. The company has announced open offer by Plutus and Exana Estates in order to acquire another 26% stake from the company, and the price is at around 990 rupees per share. We have Nitish Mittersen, who is a joint MD and CEO of Nazara Technologies, joining us on the show right now. Thank you so much for joining us, Nitish, and help us understand about this entire open offer and what does it mean for the company.
Sure. Thank you for having me. So, the company has raised a preferential issue of INR 495 crores to aid its growth in organic and inorganic ways going forward. And as part of that transaction, the investors who are Arpit Khandelwal and Mr. Mithun Sacheti, through their entities, will hold 25% in the company, which triggers a mandatory open offer. So that is the announcement that has happened today.
Nitish, give me some more details on where the proceeds are going to be used for, and what are the details of the preference issue?
So for us, as you know, we've been pretty acquisitive and we're seeing a lot of confidence and good performance of the companies we've acquired. So I think we're at a point where we think we can really scale this more actively. And therefore, most of the proceeds will go through relevant strategic acquisitions. We also announced a small asset purchase today of 2 games from Zeptolab, which we think is a very attractive transaction for us. So we think with this additional funds, we'll be able to drive further growth in 2025. And we continue to have a very healthy pipeline of opportunities to focus on.
Right. So like you spoke about the IP acquisition, I believe is about for 2 games from Zeptolabs, and also it's about 67 crore rupees or so. If you could give us more details on this, what sort of synergies would be there for Nazara Tech in this?
For a lot of the games that we're acquiring or the game studios that we're acquiring, we've created a center of excellence across strategic areas of inputs, which include user acquisition, it includes data analytics and artificial intelligence. So we're building strong domain expertise in these areas, and then helping each of these games and gaming companies that we acquire to leverage these, IPs and opportunities to grow faster, improve the profitability. And that seems to be working well for us. So we kind of want to double down on it.
Interesting. What I wanted to understand, Nitish, was also what is the update on the promoter stake and whether or not, there's a plan in place already for the continuity of the management? Because what I understand is because of this open offer triggered after the preferential announcement, the post-transaction stake would be about 27.2% for Axon Estates and Plutus Wealth, right?
That's right. So the existing promoters are going to continue to control the company, and the existing management, including me being the CEO, are very much going to continue doing what we do on an ongoing basis. Both Mr. Arpit Khandelwal and Mr. Mithun Sacheti will come in as deemed co-promoters and will add value to the company wherever possible.
So from the current 9%, you're not looking to dilute it any further, are you?
Not at this point.
Okay, fair point. Any other acquisitions that you may be looking at, considering, that's always been a strategy and you've always been scouting for newer assets?
I think a lot of our focus is on core gaming studios. The studio we acquired a few months back, Fusebox Studios, has done well for us, and we are looking for similar opportunities. We will build a pipeline this year and look at. We are not in a hurry, but if we get the right opportunity, we will definitely execute it.
Right. So, keeping in mind the way the pipeline is looking like for the company, and you did say that you are having a healthy pipeline and you are also scouting for great opportunities. Are you on track to meet any of these revenue estimates that you have actually penciled in for the company, or are you expecting to better it going ahead, given the fact that now you will also have fund to go ahead and look at better opportunities going ahead?
So, earlier we've guided to the market that we will do at least 300 crores of EBITDA in FY27. And I believe we are firmly, in place to achieve that. Of course, our objective will always be to better it. But at this point, I can reiterate that we are firmly on track to meet our guidance.
Right, so firmly on track to meet your guidance. And what about FY26? How is it looking? How is it looking for you, actually, Nitish? Given the fact there's lots happening for the company.
We're feeling very positive and bullish about FY26 as well. We don't have specific numbers out for FY26, but I think you will definitely see an acceleration of growth both in revenue and profitability.
So you will see further acceleration in growth going ahead for the company, but all the very best for that. Nitish, thank you so much for joining us and candidly answering the questions, especially when you talk about the open offer and also the acquisitions that the company has made when you talk about the IP acquisitions. Thank you so much for being part of the show at this point in time. But let's move on then. And ahead of the Union Budget 2025, Pritin Kumar, who's a partner at Deloitte India, talks about taxpayers' demand for technological reforms to make the process of tax compliance smoother and simpler. Listen in.
Historically, taxpayers have always been talking about big ticket items like use of artificial intelligence and blockchain in tax, as well as introduction of the standard audit file for tax, or SAFT, as it is popularly known. Now, these remain very, very relevant for the medium and long term. But what is interesting is that the taxpayers' expectations around technology are now very focused at the micro level on the short term. Now, what do I mean by this? Taxpayers today want the tax administration to use technology for the tracking of appeals that they have filed, for understanding the processing and the status of any applications that they have filed for rectification or giving effect to appellate orders, around grievance petitions, things like issuance of refunds to taxpayers, deletion of demands, the reconciliation of data which taxpayers have submitted vis-a-vis what is available as per the tax department's records. There's a wide area of things at the micro level is what is the expectation from taxpayers. Now, interestingly, and the good thing about this is clearly aligned with the vision of the tax administration as well. The finance minister, in her budget speech last year, had actually talked about these things around making all the processes paperless and improving taxpayer services by embedding technology. Incidentally, she talked about rectifications, applications, and order game effects, etc. So I think it's a great convergence.
Zomato, and in case you're wondering why that stock has suddenly fallen, it's because of its earnings, and they're definitely sub what the market expectations were pretty much on all counts. Take a look at the consolidated margins there at 3% versus 4.7% sequentially. So that's quite a bit of drastic dip. There is, of course, that, seems like there is an exceptional item there. The PAT couldn't have been lower by 66.5% on a sequential basis, even though it's managed to come much lower than street estimates pretty much across the board, and especially at a time when revenues have actually seen an uptick. And which is why I guess, the stock hasn't fallen a whole lot. It's not even come to Monday's lows of 220 thereabouts. So the revenues are in line. PAT, of course, is a miss, and I'm sure there is an exceptional item there. And the margins as well seem like a miss. And look at the way this stock is actually spiked up around that 240 odd mark. You're again seeing a pickup come in the stock price, and we've managed to pretty much negate that 2% cut. It's back on its way to recovery. Of course, the other key expectations, we're expecting the QCOM GOVs to see a very strong 15% kind of growth sequentially. So let's see whether they've managed to match up to that or not. Maybe there could be a hit on the Blinkit margins, because on an overall basis, the operational numbers are not matching up with the street estimates. Blinkit, we were expecting, is going to post a contribution to the margins of about almost 3.7%. Maybe when we get into the nitty-gritties of the numbers, that may have fallen short of expectations. And the going out segment GOV margin, we're expecting a surge of about 120% on a year-on-year basis. We really need to dig out more details, and we will get our sector analyst as well to analyze these numbers. Food delivery GOV, we were anticipating a 6% QOQ growth, but it seems like, at least optically, looking at the first flash of operational numbers, the numbers, of course, have fallen short of expectations. We've got Pashupati Advani as well joining in on the show right now. Pashupati, there was no chance that a Zomato would continue to, chug along at this kind of pace. Of course, there seems like a one-time adjustment right now. Maybe it was on account of that ticketing business of Paytm that they acquired. We will get into the nitty-gritties. But I guess with structural stories like Zomato, it's really a factor of how much do you want to pay for the business, right? It's all about valuations.
Well, I think Zomato has built a moat, but I don't know if the moat is big enough, because there have been a whole bunch of new players that are trying to get in. And I think they're taking away, using price, they're chiseling away some of the market share. So, as they say, the jury's out. We don't know what's going to happen finally. But I think that it is, this is a space, it's here to stay. They're getting more efficient. China's been doing 30-minute deliveries for probably before COVID even. They were doing it. So there's no reason why we can't do 30-minute deliveries on everything. So, Zomato is definitely a big player, and it's here to be in this space.
Right. If you just look at the numbers, and there are some more details coming about. One is the delivery spends is coming at around 1,450 odd crore rupees when you compare it to about 1,068 crore rupees on a year-on-year basis. Also, there is a segment others under the other expense, which has actually seen an uptick, a very sharp uptick on a year-on-year basis, 1,083 crore rupees as against 590 crore rupees. So that also could be one of the reasons why that number, you're seeing a huge miss come in on those numbers. But yes, the consolidated adjusted EBITDA is coming at around 285 crore rupees as against 125 crore rupees on a year-on-year basis. So the adjusted EBITDA number is much better than what the actual numbers or calculated numbers are looking like at this point in time. So that's one of the reasons, or that could be one of the reasons why we're seeing the recovery in the Zomato stock price after the sharp dive of about 2.5% or so. Kunal, how are the charts for Zomato looking like? No doubt it is reacting to the numbers right now, and this one has actually been the one that everyone's been waiting for a good correction to creep in, which we actually saw in order to buy in the counter.
Well, yeah, I did. And, the stock, when we look at this over the last 3 months or so, from 300 levels, went down to as much as 220, 225. That was the low the stock had made, I think, previous week or the week prior to that. Now it's bounced back to that 250-ish kind of a zone. And I was looking at the intraday charts, especially on the results for Zomato. And, 50% of the volume of the day happened in just the last 15 minutes for the stock. And, the stock budged just about 2% to 3%, moving in a band from 250 to 242 to 43 thereabouts. So that's a very mild kind of or a tepid reaction, for the stock going into the results and the results price action. Generally, after such kind of a price action move and the strong volume jump, we expect the stock to get back into at least a stable to a slight recovery, over the next few trading sessions. So, wouldn't be surprised that if 240 levels are not breached for Zomato and the stock closes above those levels, we may actually see the stock recovering over the next couple of days.
Right, so that's about Zomato. In fact, the food delivery revenue has seen an uptick about 2.9% on a quarter-on-quarter basis. The quick commerce space has seen an uptick. The revenue has seen an uptick about 19.1% on a quarter-on-quarter basis. And one of the most important numbers coming in for Zomato is the food delivery GOV, which is coming at about 2% versus 5% on a quarter-on-quarter basis. We were expecting it to come in around 6%. And the quick commerce GOV is coming at around 27%. We had a poll about 15%. So that is coming in substantially higher than what the street was anticipating, Aisha. So that could hopefully trigger a recovery in the counter, given the quick commerce is a big bet. But let's talk about quick commerce, and let's talk about all of these players actually, Pashupati, and let's talk about where do you see Zomato, Swiggy, and now also you have Zepto that is looking to file the DRHP for the IPO. How are all these counters looking to you, given the fact that the sort of a competition is only increasing?
So as you said, these people are definitely in the space. The space is getting bigger because there are new players coming in. The moat is there, but not such a big moat that people can't approach it. And so I think, the quick commerce business is supposedly the new play, and you've got Blinkit very strong in that space. So I don't know, what's going to happen, but I think it's going to be a bit of slugging, bit of losses. Price is obviously going to be one of the main factors in kicking the weaker players out. So let's see what happens. I think, give it a few months and see where Zomato is, Swiggy, where Blinkit is, and see, who's getting funded and who isn't.
We should shortly have Snehi as well come in and analyze those numbers for us as to what those other expenses actually entail. In the meantime, just looking at the Zomato stock, and as resilient as it may be, it always finds buyers on every given dip. 244 is where the stock is, so hasn't quite even stayed at the 2% cut that it fell to when the first flash of the numbers came in. Indian Hotels, that's also seeing some profit taking after an inline set of numbers. That stock is lower by about 3.25%. The other laggards today are SBI Life. Trend continues to see a cool off, 616 on the futures. That's where that stock is. There's of course Voltas, which is down 3.5%, Supreme Industries, Shriram Finance. These are some of the laggards in trade. Pashupati, since you do track Paytm as well, I wanted to understand whether you've taken a look at the earnings and what you made of those.
Paytm has jumped up a lot, and it's almost touched 1,000 and has now come back to 900. I think it's consolidating here, and it's on everyone's radar screen. I don't think there's a lot of trading going on, but I think that they are making still losses. So I think that again, the beginning of the slug fight, I think, between all these companies which are doing marketplaces as well as delivery, and it's going to be messy in that space for the next couple of years. But the good thing is the Indian public is getting, having more money and having more inclination to use their services. So that's good, because their percentages as a percentage of food sales or food delivery is very, very small and could quite easily jump up very nicely. And so I think that, Paytm is also a place to be, place to nibble. But, I personally bought and sold it, and I find it very difficult to jump in again, a couple of 100 points higher. So, that's my own personal bias. It's wrong. I should change, but I haven't yet.
So that's a take coming in on Paytm, but let's take a look at Zomato, because that particular counter is now down about 3% or so, and we have Snehi to tell us exactly what went wrong with the numbers in the quarter gone by. A huge miss when you look at the numbers, the PAT, the EBITDA, or for the matter of fact, margins, Snehi.
Well, yes, so operationally, if you take a look at Zomato's Q3 numbers, it's a weak set of numbers coming in, because revenue is the only thing that is in line with what we were expecting at ET now. Revenue has come in at 5,400 crore rupees compared to 4,799, which is up 12.6% on a sequential basis. However, the series of bad news starts when you take a look at the EBITDA, because EBITDA has come in at just 162 crore rupees compared to 226 crores, which is down 28.3% sequentially. Net profit has taken a big hit, coming in at 59 crores compared to 176 crores, which is down 66.5% on a sequential basis and missing our polls by large. EBITDA margin also at 3% compared to 4.7% quarter on quarter, which is down more than 170 bits. So it's looking, revenue is the only thing that's in line. However, you have a PAT, EBITDA and margin miss coming in. Also key to know that there is no exception items, which means it's an operating mismatch that has come into the company or an operating fault coming in. Now segmental revenue, food delivery is up by 2.9%, quick commerce up by 19%, going out business has done pretty well at 68%, Hyperpure is also up 13.4%. What is ailing the EBITDA this time is advertisement and sales promotions expenses have come in at 521 crores, which is up 24% sequentially. If you take a look at the GOV from the press release that the company has got out, the B2C business GOV is looking healthy at 57% year on year. Food delivery GOV is 2% higher compared to a 5% poll that we had. So that number has missed, and they have also flagged off some demand slowdown when it comes to the food delivery business. However, what is done well is the quick commerce GOV that's come in at 27%. We were expecting 25%, so that's looking good. Going out GOV grew 35% quarter on quarter, and like for like also it's up 15% quarter on quarter. Hyperpure revenue has grown up 13%. The EBITDA drop they have attributed to investment in expedited new store openings and new customer acquisition in the quick commerce business. Moving on to Blinkit, some very positive news coming in for Blinkit, because Blinkit store count has crossed the 1,000 mark 1 quarter earlier than guidance, and now they're aiming for 2,000 stores by the end of FY25, 1 year earlier than the earlier guidance of FY26. So very positive move coming in from Blinkit. At least demand slowdown has been seen in food delivery, and District and Bistro apps have been launched by the company in Q3. That's the lowdown. Operationally looking weak, but it's the quick commerce business and the commentary for Blinkit that is looking very positive for Zomato.
But Snehi, to add to that, they've also mentioned that they're likely to operate in losses for the next year or so. What could that be on account for? I mean, is it a structural downturn in the business, or is it just going to be more aggressive acquisitions that would actually, suck up liquidity?
Absolutely. So it is the acquisition front that the company has attributed to their rolling out of campaigns on Blinkit. When you take a look at the festivities that are coming in, or marketing campaigns, ad spends, that is something that has gone up incrementally by more than 20%, rather 24% on a sequential basis. Depreciation numbers have shot up, which is why operationally, if you take a look at these numbers coming in, especially on the EBITDA and the PAT front, it's a big miss coming in from what we were estimating here at ET Now.
All right, so that is all about Zomato, the numbers, the commentary coming in from the management. They are saying that, I will quote from the shareholder letter that they have, that we are likely to operate in losses for next year or so, but we do not expect them to be meaningful in the overall context of Zomato. That is the commentary coming in from the management. The stock right now is down and out in trade. It is down approximately 4.5% or over 4.5% as we speak. So let's watch out for that, and let's get in more insights as we go by. But let's move on, and Naresh, let's talk about how is actually Swiggy looking to you on the charts. I know it's a very recently listed counter. The chart history will be limited. Anything that you can help us with?
So technically, you would be watching out for the opening day lows, which is 400. Till the point that 400 to 470, the first 2 days, that was the range. So till the time it holds above 460, 470, the bias remains positive. But for now, not much of a data, but it only gets weaker once it's sustained below 460.
All right, so that is about Swiggy and Zomato, and also Paytm. We've spoken at length about these counters, but let's move on and let's talk about what exactly is happening in the entire auto space, Kunal, because this particular space for the week or for the last, or rather this year itself, has not been that great coming in for the auto sector. What's your take? What sort of a chart are you looking at for the auto space in particular?
See, I believe that this trend for the downside would continue for auto stocks at least for the next 1 or 2 months, because such kind of a move for the auto index, or which generally happens for sectors, which takes the index all of a sudden down towards a zone where these indices of these sectors go into a high comfort zone, or much more relatively strength zone, towards a point where these stocks in the sectors are into a huge underperforming spree. That generally takes a process of at least 1 to 2 quarters. We've completed 4 months, 3.5 months of this price correction for these auto stocks. My belief is that potentially another 2 months could be in the offing, where many of these auto stocks could probably try and make a very consolidative kind of a low for themselves. So I would not be in a hurry to try and jump and buy into these auto stocks, especially the ones which have been beaten down. It's always better to try and buy the stocks which have been relatively strong. So I think in that sense, M&M and Eicher Motors continue to be the strong names.
6% cut now on Zomato. I don't think the street was factoring in that the losses are going to continue for another year or so, aggressive as it may be in trying to garner more market share and therefore a higher discounting strategy, other than, of course, extremely aggressive on, capex and acquisition front. Almost 7% now on Zomato. That's the kind of fall that you're seeing. So that smidge of a bounce that you actually saw is getting undone very, very fast, 7.5%. And now it's almost in a free fall situation. That's Zomato in trade for you, 230 and still counting lower as we speak right now. The market will, of course, try and digest what the commentary from the management is, and then perhaps assign and subscribe a fair value to the stock, which was kind of looking overvalued. 230 now on Zomato and still counting lower as we speak. The other ones, of course, are, an idea which is holding up. There's, of course, Kotak and Wipro as well, both earnings reactions. But Pashupati, analyzing the earnings so far and how mixed the count has been from a Kotak on one hand and an Axis disappointment, which we saw on Friday, what are you anticipating from the entire private banking space? Because the market has been once again pinning its hopes pretty high on what the financials are going to do from here.
Well, obviously the two jewels at the top of the private banking space are HDFC Bank and Kotak, and they've continued to do well. HDFC Bank rolled up and now rolled down, and now I think it's rolling up again, but it's floating between 1600 and 1800. But they are feeling some pressures on their bottom lines because of some margin pressures are there, and that's coming from fintechs who borrowed from them, from other places where the payments are coming a little bit slower. So I personally am not so happy with the banking sector, though if I wanted to be in banks, and since financials are a large part of the index, I would definitely be in the top two and not be even in the next tier like Axis, and RBL also had horrible results last week. So it's not such a good space to be.
Okay, pretty tentative, and then of course this hit on Zomato. But we're going to wind it up right here on this edition of Closing Trades. Pashupati, great to have you on the show. Kunal, Naresh, we'll let you both as well go on that note, and I'm going to hand it over to Snehi for the closing trades.
Absolutely. We're summing up a very excited day on D Street. We have Nifty that's managed to cross the 23,300 marks, looking good. A 0.5% uptick coming in on Nifty. It's a good way to start our trading week. Sensex also not far behind, 0.5% uptick coming in on Sensex as well. Barely holding on to the 77,000 mark with no complaints here, because we've seen a good sharp uptick coming in from the day's lowest point when it comes to the Sensex. Advance decline ratio very steeply in the favor of the advances today, so looking good. Broader markets also showing some very good strength of support, a show of support coming in. 0.7% uptick coming in on mid cap. Small cap continues to be the outperformer. 1% uptick coming in on Nifty small cap today as well. Let's take a look at what Nifty Bank is doing, because it's been the clear outperformer in today's trade. A 1.6% uptick coming in on Nifty Bank. It's not only the private banks, the PSU banks have also participated in today's rally, because let's pull up a Nifty PSU bank and see what the percentage uptick is like. You have SBI that's doing pretty well, 1.8% uptick coming in, and Nifty PSU banks also up 1.8%, almost 2% uptick coming in on that front. So that's looking very good as well. Since the start of the day, you had FMCG and pharma and FMCG and auto, and along with a little bit of IT flip-flopping in the red. So those were the sectors that were tanking away, but it's been the clear outperformer the day of the banks coming in today's trading session. Nifty auto trading with a cut of 0.5%. Nazara Tech, UBL, lots of news flows coming in around these stocks in today's trading session. IOB, Paytm, Zomato right now that has been tanking more than 7% in today's trade on the back of a weak set of numbers. It's been a day of earnings, it's been a day of news flow, but also well that ends well is that's how we can sum up today's trade, because the Nifty is up more than 0.5%, and it's been a good trading day and a good Monday for us on D Street today.